Hey there. Happy Friday. I hope wherever you're at, you are having as gorgeous of a day where you're at that we're having here in Chicago. I'm actually out in the middle of running errands because I have a full weekend working out in the yard ahead of me. We finally have a weekend with warm enough temps and no rain. So hope you're having a great day and hope you have a great weekend. I am dropping in here for part three of my series I've been doing this week on speeding up cash collections. The first day we talked about invoicing. Yesterday I talked about ways to expedite client payments. And today we're going to talk about my favorite topic, really, of the three, which is accounts receivable and collections. And the reason it's my favorite topic is because what I most often find with clients who are struggling with cash flow is this is an area where they have pretty much no process. We all want to, basically want to just send out our invoices and we just, we kind of trust our clients to just pay us, but that doesn't always work. So if you are struggling with cash flow, listen to this and see if you don't have process in this area. This is an area where you can really have an impact. And I really think if you have any issues with clients paying you, if you want them to take you seriously, you have to have some accounts receivable and collections processes in place. And that doesn't mean that you have to go out and, turn yourself into a debt collector. I think that's one of the reasons a lot of times clients don't have processes in place. One, they just trust people to pay them. I did my part and delivered the service of the product. I expect you to do your part. But there's a lot of clients out there, customers, just like you have cash flow problems, your clients can have cash flow problems. And, when they get that invoice, if they have a client, if they've got to pick between paying two different vendors, the vendor who's got some processes in place where they know that if they don't pay, they're going to hear from the customer or from their vendor, those are the people that are going to pay. So, I'm going to talk about three things today you can do, you can put in place or should have in place in your accounts receivable and collections process. This is one, by the way, where I think the order that we do them in does matter, because so in some of the other areas I've talked about, I've given you a bunch of different ideas and you can really kind of just play and experiment with them. But in the case of accounts receivable and collections, I would really recommend doing them in the order that I'm going to talk about them. So the first thing I want you to do is I want you to make sure that you are processing client payments, getting them applied and reconciled on a timely basis. And that means weekly. One of the things I'll see is clients will basically, and again, it can depend on whether you have an internal or an external bookkeeper, but they are not applying and the and part is important, applying and reconciling client payments to OpenAR they're only doing it on a monthly basis, and it really needs to be a weekly basis. One of the things I'll probably talk about more at some point is I always recommend my clients have a weekly CFO hour. What you need to do in that CFO hour, or that call it a finance hour, have a weekly finance hour, and what you're going to do during that hour is going to depend a lot on the level of volume that you have. Are you outsourcing? Do you have work internally? And even how good is your bookkeeper? But one of the things you're going to do in that weekly hour is you're going to get payments applied and reconcile them. If you're using a bookkeeper, either external or internal, what they're probably doing is they're bringing, let's assume you're in QBO or something similar. You have a bank feed that's bringing your transactions into the system, and they're basically, if it's bookkeeper worth their salt, they're going in on a weekly basis and they are applying payments. But a lot of times what they'll do is they'll just blindly apply it. So you create an invoice for $10,000. That client pays you $9,000. They just apply that $9,000 to the invoice. And cash application or applying your payments really has two parts. One is matching your payment with the invoice that it came from, but it's also, if they're not an exact match, figuring out why not. And it's one of the things that, if you're not doing that reconciliation on a regular basis, what will happen is 3 or 4 or 5 months later, when you're really trying to collect that money, you're going to have a discrepancy between you and the client as to what they owe. So again, this scenario, the ideal scenario is you bill them X and they pay you X, and you just apply the payment to the invoice in QBO or whatever system you're in. But where you run often into problems is you billed for X and they paid you Y. So you billed for $10,000 and they sent you a payment for $9,000 and Y. And you need to know, you need to have a process for following up with the client on, well, why did you only pay me $9,000? Maybe they're disputing the amount of the invoice. Maybe they saw an error on the invoice. Maybe they weren't happy with the service, but you don't want to just leave that hanging out there. So the very first step is to be posting your cash and reconciling it on a weekly basis. And the reason this step needs to be done first is because in order for your AR follow-up and your collections to be meaningful, is you need to make sure that balance that's on your accounts receivable is actually accurate. So that's step one. Once you know that, once you've got a process in place where you're applying your cash, you're reconciling, and you know that the balance on the client's account is correct, what you need to do is you need to have a follow-up reminder process, and you can automate this in QuickBooks, or again, Xero is another tool that people, package that people will use. So you can automate this in those types of systems, but it's basically something. It's usually you can set up different parameters, but it would typically be if an invoice hasn't been paid, say 5 days after that or 2 days after that, they get a follow-up email. And if it still hasn't been paid, in 7 days they get another follow-up email. Maybe the 7-day notice is worded a little more strongly than the first notice. And then at 10 days, they get another notice. And at 30 days, they get a more strongly worded. As you go to set it up, you can set up the different variables for how often it's sent. You could also do mail reminders, but everyone seems, now really to go to email. But it can also be good to also send them something that's a physical copy. But set up some kind of process. In accounting parlance, we call this a dunning process. I'm not even sure where the name came from, but that's what it's referred to in like the AR in the accounts receivable field. It's called a dunning process. So you want to have a series of automated reminders to pay the bill, because sometimes the reason they haven't paid it is just because they forgot about it. Maybe it got lost. Maybe when they get your reminder, they'll be like, "Hey, I didn't even get that invoice." I actually had somebody send me theirs wasn't automated, but they had done some work for me, and I kept looking for the invoice, and I hadn't got it, and they finally sent me a notice and saying, you haven't paid our invoice. I was like, well, I haven't gotten it yet. I didn't receive it, and for whatever reason, I had never received the invoice. So again, when they know that you're following up, and it's just a way of showing that you're legit, and that you have, that if they don't pay, you're going to notice. The third step you want to have after you've done that, you need to have an escalation and follow-up process. So you send out these reminders and they still don't pay. What is your escalation process? Depending on how big, how many layers you have in your organization, you might be the only layer as the business owner. It may just be that, say, when something is 14 days past due, that your bookkeeper, sends a list of these to you, and then you put in a call to the client yourself. It could be that maybe you have maybe you have a VP of sales, and that's often the person that has the strongest relationship with the client. So maybe they escalate it to your VP of sales, and your VP of sales contacts the client, because part of the thing in AR and collections is figuring out where at the client is the payment held up. If it's a small organization, there's not that many people involved. But if you're dealing with, say, for instance, a Fortune 500 company, chances are they have multiple people who have to approve an invoice. So it could be that your primary contact, your salesperson's primary contact, has already approved the invoice, but it's sitting, on the desk of some other approver waiting to be approved. So, but you need to have an escalation process so that if X number of days past due, it gets escalated to someone for a call, and then maybe at 30 days it gets escalated again. And one of the big things that you need to think about in this is, at what point do you quit servicing this client, or quit taking new orders from them? That's ultimately your biggest carrot that you can put out there for a client is, if you don't pay me, I'm going to suspend my service. I can't service you anymore, because at this point, you're working for free. And what a lot of clients will push back on this, like, I really can't do that because I need the business, but you're not getting paid. So you need to figure out a way. Usually when you do that with a client, at that point, then you can really have a serious discussion, you'll typically get payment unless they really, are, in financial straits. And again, if you have a client that's in real financial straits, that's probably not the client you want to have anyway. So you need to have some type of process for deciding at what point you're going to suspend service, or, no longer take orders. Another thing you can do is, this works well if you're at a service business, where there's some type of customer service support or ongoing support, is, maybe they get, live support, live chat support. But you could have a policy that says if your account is not current, then you only get emails. You only get email support. In order to get your live support, you have to have, your account current. So again, you can think about your industry, think about the demographics of the characteristics of your client. So again, accounts receivable is that area that if you really put some procedures in place, and notice none of these, I haven't even gotten into, if it's a true, bad debt that you've done everything and, it's a year old. Now what do you do? I mean, that's a whole other process. So this isn't really even getting into, like debt collection or whatever, because you can, at some point, if you have a true bad debt, there are steps you can take to, refer to an attorney, refer to a collection firm. But we're not talking about getting to that point. We're talking about what can we do to avoid that point, and basically just get our clients to pay us on a more timely manner. And they just need to know that you have a process, because if they have limits, say they've got $10,000 to pay bills, this month, and they've got one vendor who is, calling them every other day saying, really, I need to get payment, when can we arrange payment? And they have another one who sent them an invoice but has never called them. Which one do you think they're going to pay first? So I hope this helped you. Again, if you scroll back, you can see the first two parts of the series. And if you go to www.carlamuntz.com/sign-up, you can pick up my cash flow guide where I go into 10 different areas that you can look to improve, where if you put some improvements in place, you can improve your cash flow. And pick up my cash flow guide. All right, and I hope you have a great weekend, and I will talk to you later. Bye.